Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for February 19th, 2018. And before I get started, I want to thank you all for your support. I want to thank you for your support. Because of you, we won the Forex Best FX Street Awards, and we won the category for Best New Contributor. And we're really proud of that, and we couldn't have done it without you guys. So thank you to those of you that are subscribers of ForexAnalytix, or for those of you that watch the videos, whether it's the daily webinars or these videos, and you voted for us. Because of you, we won. So thank you very much. And I also want to congratulate Greg Horvat, who is our Elliott Wave technician for ForexAnalytix. He also, with his company, he won Best Buy-Side Analysis Contributor, and so we're very proud of Greg and very happy for him as well. So thank you guys and gals for your votes. It really means a lot to us, and we're gonna display this award proudly. We're just very happy. Thank you very much. Now, for those of you that are not subscribers, make sure you try us out. It's $10, or $1 for 10 days. $1 US. That's it for 10 days. You can try us out. Download the mobile app, which gives you our analysis right in your pocket. You can download us in the App Store or the Google Play Store. And once you do that and you sign up, you can log in and see all of our analysis. Come check out our chat room and be part of our community. We'd love to have you there. Okay, now let's talk about this next week. This next week we have not a lot of data coming out. We don't have a lot of data, but in the US we have FOMC meeting minutes on Wednesday. But in the UK on Wednesday we have some employment data, inflation report hearings. On Thursday we have second estimate GDP in the UK. So if you have any pound exposure, make sure that you are aware that there's a lot of key data coming this week. In Canada, we have retail sales on Thursday. We have retail sales out in New Zealand on Thursday, and Thursday night, Friday morning in New Zealand, and then CPI for Canada on Friday. All right, so in the US, instead of paying attention to the economic data, I think we're going to have to focus a little bit more on what's happening in other markets, like what's happening with the Treasury market, what's happening with the S&P. I think we're going to be able to cue off of that a little bit. So let's talk about the 10-year Treasuries. Now, bonds have been getting beat up recently in recent weeks, and we've seen it with yields approaching 3% in the 10-year. The bond market has been under pressure. Now, the bond market actually looks like we're in a descending wedge, and it looks like it might bounce a little bit. So if we bounce in the bond market, that means yields are coming down. Now, the dollar tends to be pretty responsive to yields, but it hasn't been in recent weeks. I mean, we've seen yields go up, and the dollar has really gone down. But we might see the bond market rally, just a relief rally, and that might spill over into what's happening in equity. So why would bonds bounce? Well, you might have the S&P pull back. So let's take a look at the S&P, and I want to take you over to this chart because you can see we've bounced to the 618 retracement in the S&P, which it's the golden fib. So it makes sense that we bounce from the 200-day moving average twice, by the way, back to the 618. I think the stock market looks a little, like it might roll over a little bit here and maybe come back down to like 2600 or 2630 or something. Now, if that happens, that means bonds are probably going to recover as you see a little bit of flight to safety. Now, if the bond market goes up and yields come down, the one currency, if you're trading the dollar, one currency that may really be affected is the dollar yen. The dollar yen has been, I want to point out the dollar yen on for a couple different reasons. First of all, we broke a multi-year triangle and we're breaking down. And the dollar yen looks like we're going to 102 to maybe 100 yen over the course of the next, it's not going there tomorrow, I don't think, but over the course of the next few weeks, maybe in the next couple months, it looks like the dollar yen might come down. Now, this would make sense if bonds rally, yields come down. One of the most sensitive currencies or currency pairs to yields, it would be the dollar yen. Even though it didn't rally as yields were going up, it may come down as yields come down. There's an old adage in the market: what does not go up usually only has one other direction to go. In the dollar yen, it might be lower. So the dollar yen looks like it may come under pressure, and that makes sense because if stocks come down, the yen is typically bought as maybe a flight to safety. So we might see some yen strength, dollar weakness, and the dollar yen come down a little bit as a result of stocks coming down and also bonds rallying. Now, I want to take you back over to the S&P really fast because I want you to see also the viewpoint from Gregor Horvat from an Elliott wave perspective. Gregor also was looking for possible reversal up here for his wave, smaller wave C, and we may have actually met that requirement, excuse me, and might come down. So the S&P hitting a lot of resistance, we may come down, based on a few different viewpoints before rallying some more. Also, speaking of the dollar, I want to take you over to the dollar index. The dollar index put in a nice reversal. Where is the dollar index? I think I just skipped right over it. Hold on. Oh, there it is. Okay. The dollar index, we're in a pretty bearish trend, which there's no argument about that. But what the dollar did on Friday is we posted a new low, okay, which I'm going to show you a key fib level here that we touched, which is basically the 618 retracement of this move from 2014, the spike low here, you can see it right here, okay, to the high in 2017. We hit the 618 retracement. Now the weekly candle looks pretty ugly, but if you look at the daily, that's a bullish engulfing. Does that mean the dollar is going to reverse and we're going to go back to 100? Probably not. But does that mean that the dollar has a good chance of heading back to 90, or maybe even 91, or maybe even slightly higher back to 92? It is possible. Especially if the market gets a little risk averse and the dollar comes, in demand. And remember, the dollar's in a downtrend, but downtrends will produce, and strong trends tend to produce reversals, even if it's just short term. We might get what they call a dead cat bounce here, where we get a significant bounce back to 90, 91 before resuming its overall trend. So that's important because we saw it not just in the dollar index, but if you look at the euro dollar hit a new high and then reversed. We broke slightly above those highs on Thursday night, Friday morning, and then we reversed. So we have this bearish engulfing pattern again with the euro dollar. So I wouldn't be surprised to see the euro pull back to 122 or 123. I wouldn't be surprised to see the dollar index head back to 90. And so if you're short the dollar or long euros or long the cable or something like that, just be aware that the dollar hit a pretty critical fib level. So technically we can see a bounce. And again, if you look at what's happening in the S&P, if you look at bonds and realize that the bond correlation hasn't been all that tight as of recently, so maybe a rally in the bond market and a slump in yields, it might actually bring in some dollar demand from a risk aversion standpoint. So I think the dollar is set to bounce, but I don't think the overall trend is shifting anytime soon. I think the euro is going to find buyers on dips. We dipped towards 121, 122, 123. The euro is going to be bought. You're going to find buyers. Or if the dollar index rallies to 90, you're going to find some sellers there. I don't think that this is a trend changing event, but I think this week could be a counter trend week. Okay. One last thing I want to cover before I let you guys go for the weekend, to enjoy the rest of your weekend, is I want to talk about Bitcoin. Bitcoin's had a nice recovery, and we cover Bitcoin here. You can see it on ForexAnalytix. You can see how we've got this nice little channel here. But our analysis has been pretty accurate with Bitcoin. We were looking for a reversal at this channel low, which we got around 6,000. We've rallied back, you can see right here, okay, we've rallied back almost to a 78% retracement, which is about 11,500, 11,600, which is going to end up being channel resistance again. So for those of you that have been buying Bitcoin or any of these cryptocurrencies off of these lows, it's been a great play. It's also been a really good move. You've had Bitcoin almost double from the bottom, so from the most recent lows, that is. It's almost doubled in value. So if I was long any cryptocurrencies, which I don't personally trade them, I just analyze them because I know so many of you do. If you've picked up Bitcoin over the last couple of weeks, you might want to start thinking about protecting what you've made, you know, whether with some stops or, you know, taking some profits off the table, something like that. Maybe thinking more defensive at this stage in the game. But that was just that. I wanted to bring that up because I know a lot of you have interest in Bitcoin. But for the rest of you guys and gals that don't trade it, hey, just remember, might be a counter trend move this week. And guys and gals, if you love this video, make sure you subscribe to our YouTube channel. Just click the subscribe button, and then also click that little thumbs up saying that you really enjoyed this video, because it really urges myself and the rest of the team to continue to film these for you, produce them for you for your enjoyment, and hopefully you guys can make some money at the same time. So thank you very much. My name is Blake Morrow with ForexAnalytix. Thank you guys for all the votes. Thank you for the award at FX Street, and thanks for listening in. You guys have a great trading week this week. Good luck. Thank you.